Hello traders and welcome to another video review. Today is Monday, October 4th, 2021. Let's take a look at the Forex calendar to see what is going on the beginning of the trading week. As you can see, there isn't much data scheduled for release and almost none of them is kind of important for the market participants. Nevertheless, we got the data from Switzerland in form of the CPI and the retail sales, right? So CPI was worse than expected, 0%, versus the forecast of 0.2% and of 0.2 previous reading. So there is no inflationary pressure on the prices in Switzerland. Moreover, retail sales are worse than expected, 0.5% versus 0.6%, but still better than a month ago, because a month ago it was minus 2.3%. Sentix Investor Confidence from the Eurozone is scheduled for release 10:30. And that's it. That's about everything for the London session. New York session will give us building permits from Canada and factory orders from the US. Deep in the night, we got data from the New Zealand business confidence for the third quarter index and AAG construction index from Australia. So not much important data, as you can see. Maybe anything else will be giving us something to trade on, right? So maybe some technical analysis, maybe some statistical analysis. Let's take a look. What do we have here? We will start with the majors, I guess, at the beginning of the trading week to see what's happened last week. What can we expect this week? The first thing is euro dollar. Euro-dollar has broken below all of these technical support levels. Now, of course, the technical support is the technical resistance, the levels you have on chart. So we are going to analyze this market from the highs of the 25th of May at the level of 1.2267. Of course, right now we have a bounce towards 1.1614 levels. This is still the technical resistance, but the key right now, short-term technical resistance, is now this level. This is 1.1666. That's the first thing. This is the key technical resistance. The other thing is, of course, this trend line here, right? The long-term trend line and the channel. I don't think the market actually follows this channel because it's been on and off so many times, but we will still keep it on the chart. The key technical support, which is the long-term key technical support, is 1.1501. Why? Because if we take a look a little bit further away, okay, what do we see here is that 1.15 is the high of the 2020, right? So that's the March 2020, that's the June, and this is the breakout in July. Okay, so that's the level basically. The other support is 1.1422, and please take a look at this situation here. Where are we right now? If we put some Fibonacci retracement from the lows of 2020 at the end of the COVID sell-off around the level of 1.0643 to the highs of 1.22 or 1.2350, we can see that the 50% Fibonacci retracement is at 1.1497, basically 1.15, which is why this is the key technical support long term, really important, and this is as well 50% technical, 50% Fibonacci retracement, of course. So please keep that in mind. Okay, we are approaching very interesting level. If we take a look at the British pound, on the other hand, we can see that this highs from the this is last year September high, and this is, as you can see, 2019 end of the year high. So that level 1.3486 is the key technical support. Now is violated, which is why it is now technical resistance. But if you take a look at the daily time frame RSI, you can see we are on the levels of the extremely oversold market conditions, right? So let's dig in to see what is going on here. Of course, I've been talking about this level for quite some time. Right now we are approaching the local technical resistance 1.3568 because we are bouncing from the oversold market conditions, right? So this is why the situation is like it is right now. And please notice what this market participants will do once we will make another low below 1.1412, because that's the temporary technical support. We're gonna put a green line on it. But as you can see, the bears are still pushing the prices lower. We have upper shadows here. Today's candle doesn't look promising at all. So we might see some sort of the push back towards the last week lows, 1.3412. And please notice that last week lows were month low as well, and the week low, of course. The next support is eventually 1.3129, which is far away from this resistance or even that support 1.3412. So that market is still in the downtrend, or in the kind of a pullback correction. As you can see on the weekly time frame chart, we are still trending below this 1.4241 double top kind of a wave. And now, as you can see, those technical supports I've been talking about, it has been violated, but the weekly candle hasn't been closed below 1.3486, but it can close. It can definitely close below this level, because we just started here on the weekly. We just started the down move, and we are far away from the extremely oversold market conditions. So we could easily go lower towards 1.3129 and this channel low before any substantial bounce will happen. So please keep an eye on the cable as well, and have in mind this context of the situation. What is gold doing? Let's take a look at gold. A weekly time frame chart is not really necessary. We don't have anything to do here, because we want to take a look at the daily time frame chart. So we've been bouncing up and down around this blue line. I don't think it's a correct line for this market conditions, but we will move it to the newest data with the high of the 3rd of the September. Not much is going on here. It looks like we have some sort of a parallel channel here around this level. There you go. There's some kind of a parallel channel. We are trading down in this channel, and currently we are testing technical resistance 1,758. We just broke it, but there is no close on the daily time frame chart yet. And of course the upper channel line as well. But we are approaching slowly but steadily this green zone I've been talking about many times. 1,658, 1,677, the key support zone, demand zone as well for the gold. We have a nice bounce here, bullish engulfing pattern, but there is no breakout out of this channel. We need to break out of this channel above 1,780 and then towards 1,800 in order to put the momentum above the neutral level and make this market more dynamic. So that's the gold market. And last but not least, let's take a look at the Bitcoin market, of course. What do we have? We have a nice bounce. We have a finally nice bounce above this trend line. after the ABC correction had been completed, we hit the highs of the wave B. 48,000 and 49,146 was the local high, and we will definitely telling something to the bears that please be careful, because it might look like the beginning of some kind of an impulsive wave, and this scenario is valid. Let me just put this scenario on the screen for you. So this is wave 1, wave 2, possibly wave 3, maybe wave 4, maybe wave 5. So right now, let me just put the wave on it. There you go, show the wave. Thank you very much. This scenario is valid as long as the level of this is exactly 45,077. We will put this level on the screen, 45,077. There you go, 45,077, 45,077. This is the level. As long as this level is not violated, this impulsive scenario is correct. So please follow this scenario as long as the highs of the wave 1 of this candle, $45,077, is not clearly violated. So we are waiting for the wave 4 on the Bitcoin, and then the last push to the upside, possibly towards 61%, of course, as you can see here, or maybe even towards the highs of the September 2021, located at 52,916. So looking good, momentum is nice, is positive, is strong. 55, 58, 59 points, not bad for the first wave to the upside. Let's wait for the situation to develop towards the next levels. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.